Where with silver, I think there's plenty of opportunity for capital appreciation. And a lot of people also conflate volatility with risk. From a historical perspective, I actually see silver as a lower risk on, that the price is going to go up than I do gold. I mean, it'll be a much more volatile ride, but I think silver has a much more compelling risk reward setup, especially right here, right now. Just from a potential upside perspective, I look to uranium sector and the silver mining sector as really having the most upside potential of any sectors right now across the whole spectrum. And silver is about the only commodity on the planet trading below its 1980 high, and it's like half of where it was in 1980. So the upside here is really, really quite compelling. Yeah, in 1980, silver peaked at like $49, and here we are. As far as I know, silver is the only one that's trading below where it was 40 years ago. And we're not talking just like a little bit below. I mean, it's almost half of where it was 40 years ago. So that alone is pretty compelling. And you think about all the currency units that have been created over this past 40 years, and pair that with this tiny little market. It just takes a little shift in global investor psychology to say, hey, you know what, I want a little bit of exposure to silver. So investors are waking up, and I think some of that money is coming into the silver market. It's just, there's a distinction between the paper price and the physical price. So if you just pull up your favorite internet site and look at the price of silver, it's going to tell you the paper price, supply and demand of paper contracts that are set on the COMEX. But if you want that physical silver, we're seeing it there because premiums are exploding. So if you want to get your hands on physical, you're probably going to pay at least $35, $36, if not more. And I define inflation as an increase in the currency supply. That's inflation. Rising prices are a symptom of that inflation. And we're starting to see the symptoms right now. That's translating over into investor psychology. And, I think that's beneficial towards commodities and especially silver. And what I found just over the last 15 years of studying these markets is that often very smart people with well-reasoned opinions and conclusions, they're both right, but in different time frames. So I think ultimately, almost all of us would agree, we're going to see very big inflation coming. The question is, do we see a deflationary bust first? I'm in the camp that I don't think we're going to see that. I think we saw that last March. I think that was the deflation. I don't think this is transitory. And with the Fed and other central banks around the world pumping in so much liquidity, that's inflationary. But you couple that also with governments around the world paying people to not work. So that decreases the productive output of all these economies. So there's less goods, less services available, and you've got more currency units chasing a smaller quantity of goods and services. So right there, that leads to higher prices. People are talking about inflation. I was just, I got my dirt bike fixed the other day, and the guy getting it, did the work on it, was talking about the parts. This part used to be $40 a couple months ago. Now it's $80 and it's on backlog. It took like 6 weeks to get it. This is just, he doesn't strike me as someone who studies the financial system and all this, but he's noticing, hey, the price of this thing just doubled and I have to wait for it. When you're paying people to not work, it's hard to take those benefits away. Whenever the government gives you something, which by the way, the governments have nothing to give you. They can only take from one person and give to another. They're not giving anyone anything. But that aside, when they create incentives to not work, it's hard to take that away. So we're seeing, labor shortages all around to create products and services. So I think this is a trend that's only going to accelerate. And, maybe shifting a little bit, I think now's the time to maybe consider stocking up on some things from a preparedness perspective. Practical preparedness is what I like to call it. So, there's more than just silver and gold. What we face here from an economic perspective is a predicament. There's no solution. There's no cure-all for this. There's going to have to be some short-term pain at some point. And the crux of the matter is that the further you kick the can down the road, you make that day of reckoning, that eventual day of reckoning, even more painful. So, the right thing to do would be to burst this bubble now, raise rates, and get back to a real economy sooner. But that would be incredibly painful. That would involve politicians telling people, hey, we promised too much. There's not enough currency units available to make good on all these promises. The money doesn't exist. They're not going to do that. There's no way they're going to do that. So instead, they're going to try and inflate away the debt. And there's a term called financial repression. That's where you have steady inflation and it erodes the real value of debt, but it's not enough where people lose full confidence in the currency and they don't really notice. So they're trying to thread that needle, have just enough inflation to eat away the real value of their debt without people noticing and revolting in the street. But at some point, we're headed to a point, if this trajectory just continues, at some point, 100% of federal tax receipts are going to go to service just interest on the debt. We're headed to that point. And obviously it can't go that long. People will lose confidence before that. And the variable in that equation is interest rates. If you double interest rates, we get there twice as fast. So there's no good solution to it. And these are things we all need to ask ourselves and prepare for. There's a shift in the general market from momentum related stocks and sectors towards value stocks and sectors. And we're starting to see some inflows, not only to just gold and silver, but more value oriented, kind of stocks and sectors. But, you look at this Wall Street bets movement that started back in, January. And then a small segment of that movement was like, they're looking for what's the next thing that's undervalued that can be a potential mania. And boom, they identified silver. Well, because it's obvious. Well, it just takes, another small percentage of the investing populace to come to that same conclusion that they correctly came to. So I think that's going to happen. Silver is ripe for a speculative mania. It's got a lot of the real characteristics that Bitcoin had. A lot of people will say, hey, Bitcoin, there can only ever be 21 million of them. So it's ripe for the speculative mania. Well, silver, there's only less than 1 billion ounces mined every year. That's a very small market cap. Call it 1 billion ounces times $30 silver. That's $30 billion globally. That's a market right there that's ripe for a mania. I'm not predicting when that's going to happen, but I am confident that we will see that. Most of silver's mining output goes to industrial uses. And by the way, there's more and more industrial uses. Industrial demand is projected to grow, especially with this green revolution and electronic vehicles, all of this. So there's going to be more industrial demand for silver. But the variable is investment demand. That's what's going to see the price really move. And back in 2020 was the first time in a long time, investment demand actually exceeded industrial demand for the first time in a very long time. I don't have the source data for that, but I read that somewhere and from Steve St. Angela. So that's key right there. I mean, that right there is an indicator of a shift in psychology of investors. So that's something I'm looking to, a trend I'm expecting to continue. I believe the silver market is the most manipulated market on the planet, and we can see that Ted Butler puts out a lot of data. Nick Laird, I look at his charts a lot, and it shows the days of the amount of short positions relative to global production. So silver is so heavily shorted, and if the end industrial users all try and take delivery at the same time, I mean it's ripe for a squeeze that could potentially cause a default on the COMEX. And again, when I say default, there's fine print in there that says they can settle in cash, but I don't base a COMEX default. That's not my primary investment thesis. That's not why I invest in silver, but it's just another thing that could very well happen in the years ahead that could send the price rising. I'm not banking on that, but it's very possible.